China's economy slipped back into deflationary territory last month, which is expected to prompt another easing in central bank policy in the coming weeks. That's coming up in our 5 Things in 5 minutes. And then in our bonus deep dive interview, ANZ's head of Australian economics, Adam Boyton, goes hunting for a thing called the NAIRU and explains why it's so important.
If you're a central bank, knowing that unemployment rate is pretty important when it comes to calibrating how high or how low interest rates should be.
But first, in 5 and 5 with ANZ. Global markets were mixed and directionless overnight, and around 5 a.m. Australian time, we're not seeing any big moves. Markets are waiting for key US inflation data next week and meandering in the absence of any major news in geopolitics or important economic data. The S&P 500 and the Nasdaq were flat. Oil has bounced somewhat and is up about 0.5% at $81 a barrel for Brent. The Aussie and the Kiwi dollars are starting Asian trade flat. The Aussie at 64.11 US cents and the Kiwi at 59.38. Number 2, China reported consumer prices fell in the month of October by 0.1% and were down 0.2% from a year ago, which means the world's second largest economy is back in deflationary territory. It had reported flat prices the previous month. Producer prices also kept falling and are down another 2.6% from a year ago. A fall in pork prices was the major driver for the fall. Farmers had stocked up ahead of the key Chinese holidays, expecting a strong rebound in demand from consumers, particularly after the end of COVID, but consumer demand remains weak. ANZ senior strategist in China, Zhao Pangjing, says the pressure now goes back on the People's Bank of China, the PBOC, to ease policy again, and quite soon.
The inflation data offer the PBOC a good reason to ease in the future. We expect the PBOC to cut the RRR in the next few weeks. And it's also possible for the PBOC to front-load interest rate cut in next couple of months.
Number 3, the Philippines economy grew 5.9% in the September quarter from a year ago. That was stronger than expected and was driven by a surge in government spending on infrastructure. Here's ANZ's chief economist for Southeast Asia and India, Sanjay Mathur.
The welcome news is that government spending had stalled for quite some time, and finally the government is getting back on the infrastructure spending program, and that should be somewhat supportive of growth. At the same time, we should remember that when it comes to the private sector, certainly both investment prospects don't look particularly bright at this point in time. And perhaps most importantly for the Philippines, private consumption growth is starting to ease off. And that means that to get GDP numbers that are stronger from what we've got right now is going to be a tall order. From the standpoint of monetary policy, the numbers are somewhat welcome in the sense that it also shows that the economy hasn't reacted that much to interest rate hikes, and should inflation rear up again, the BSP will be relatively more comfortable in raising rates another time.
Number 4. Sanjay explains why the new Marcos government in the Philippines is restarting its infrastructure spending.
The first challenge that the Philippines has had is in terms of identification of public infrastructure projects. After the Marcos presidency, the change in the presidency, projects were put back on the drawing board again. That was the first challenge. The second challenge was that the financing had to be recalibrated, and that took some time. So now both these issues seem to have been resolved to a great extent, and therefore we've seen actual implementation come back on the table.
Number 5. You might have been hearing about a new leading indicator of recession in the United States economy called Sam's Rule, after a former Fed economist. Sam's Rule says if the 3-month moving average of the unemployment rate rises by 0.5 percentage point above its low in the previous 12 months, that's an indicator that the economy is normally in recession. US unemployment has risen from 3.4% in April to 3.9% now. So are we there yet? Have we triggered Sam's Rule? Here's ANZ's head of G3 Economics, Brian Martin.
You're getting close to that 0.5% level, but you're not there yet. And that is something just to bear in mind, because some of these signals, can give you insights about what might be down the road. So potentially you could get a period of very soft, below trend, if not slightly negative economic growth. But I think that's all consistent with a soft landing.
Brian Martin there. We all love the idea of a soft landing. Now, for part one of our bonus deep dive interview, we find out what the NAIRU is and why it matters as an economic concept. No, it's not an island in the Pacific, although the biggest island in the Pacific, Australia, has seen a change in its NAIRU lately. That's the non-accelerating inflation rate of unemployment. Here's ANZ's head of Australian economics, Adam Boyton, to explain all about the NAIRU in part one of our deep dive.
Well, it's one of those things that even when I give you what it stands for, you'll say, well, economists don't make this stuff easy, do they? It stands for the non-accelerating inflation rate of unemployment. So let me explain it a bit more simply. It's that unemployment rate that if we're above it, inflation typically falls. If we're below it, inflation typically rises. And of course, if you're a central bank, knowing that unemployment rate is pretty important when it comes to calibrating how high or how low interest rates should be.
So how do you find it? Is there someone who reports it, or can you see it on a shelf somewhere?
Nobody knows exactly where it is. There's a whole bunch of different ways you can estimate where this NAIRU is, but typically you really only know when you're above it, when you start to see wages growth slow and inflation decline, and you also typically only know when you're below it, when you see the reverse happening. So it's one of these important concepts in economics that is also, to be honest with you, Bernard, it's hard to pin down and say this is the number. There are varying estimates out there. The estimates that the Treasury and the Reserve Bank have vary from 4.25 to about 4.5. So it's probably fair to say most people would think that it's in the low fours in Australia.
But what's it been doing for the last 20 or 30 years?
It's been declining for the last 20, 30 years. And this is really, I think, quite important when we think about both monetary policy now, but also what the economy could look like 5 or 10 years from now. So if we were to look at a chart of the NAIRU estimates over the past 20 or 30 years, you'll see this steady downward movement to the point where I think if you'd said to somebody, say, in the early 1990s that full employment in Australia or the NAIRU is a little above 4%, they would have thought that was definitely wrong. Yet we've seen it trend down fairly consistently for a long period now, and that has quite a few implications for the economy going forward.
And why is it fallen? Because when I was studying economics, the NAIRU was an idea that seemed like a constant, like a floor or a ceiling that was flat.
One of the first things, and I think it's really quite important, is that we've had a lack of really serious recessions, particularly in Australia over the past 20 or so years. So obviously there was that deep recession in the early 80s, another deep recession in the early 90s. What both of those recessions did was put the unemployment rate up quite a lot. And what that tends to do is those people that often lose their jobs in those periods find it very difficult to get another job because the unemployment rate is then so high. And so people, I guess, lose their attachment to the labour market. They lose some of their job skills. And while they're out of the labour market, perhaps the skills that are in demand change.
ANZ's Adam Boyton there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, November the 9th. Catch you on Monday with part 2 of our deep dive interview with Adam Boyton on Australia's NAIRU and how it's falling. And we look ahead to next Wednesday's key US inflation data. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.